The Fed will announce on Wednesday if they will cut interest rates, and could we hear some signals about quantitative easing and they start the money printer again as crypto and the stock market and risk assets continue to struggle with massive sell-offs? I want to share what different analysts are saying, as well as the rise in global liquidity and the impact that could have on crypto in the latter half of March. I'll give you the details. Let's get into it. Hey everybody, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. Folks, Bitcoin and the crypto market continue to consolidate or chop sideways. Nothing happening here. We saw obviously Bitcoin bounce off the lows of $76,000. It's currently over 83,000, but right now it's doing a whole bunch of sideways action. And of course, altcoins are waiting for Bitcoin's directional move because the market follows Bitcoin. However, as I've been sharing with you guys, the macro is setting up nicely overall with the DXY, the dollar currency index, crashing. So that's very good for risk assets. There is a lag. And of course, global liquidity continues to surge, guys. This is very good. And we know the system we live in is the fiat currency system where they have to print. And this is not just US, but central banks globally. So the fundamental principle of why assets rise is due to global liquidity. Now, when you get to the specifics in the short term and midterm, it's based on company earnings, right? Or adoption and all these different factors that are usually out there in the mainstream. What's not in the mainstream is global liquidity, and that the more money they keep printing and the debasement of the currency, that is what drives asset prices for crypto, stocks, real estate, and much more. So all of these things are moving in the right direction for us. And this week, we're going to hear from Jerome Powell and the Fed. On Wednesday, we will hear if they're going to cut rates. Now, I think there's a high chance they do, given the market pullback we've been seeing, huge sell-offs, right? And then you have all the things that are going on with tariffs and the tariff wars on and off and all that jazz. But we also may get some signals from the Fed that they're pausing quantitative tightening, because they've paused rates. They started cutting rates last year, and they're still on the cutting rates track. But quantitative tightening itself, they haven't officially said, hey, this is ended. And we know once that's ended, it's only a matter of time for them to go back to quantitative easing and printing money. You may say, well, how do you know that, Tony? Well, look at this. The government, Congress, passed a bill to avert the government shutdown. And of course, they're going to spend trillions of dollars. I think it's like 6.75 trillion, taking the government till September, where they will have to do another bill. So they have to keep doing this. And the more they raise the debt ceiling, the more they have to spend, and then more money they have to print to service the debt. This is the same cycle over and over. And that's why no Republican or Democrat can stop this unless they change the entire system. Now, I know some of you are going to say, Tony, but what about Doge? They've been cutting the overspending and all the frivolous spending as well. Well, that's just a drop in the bucket. Here, Bob Elliott, who's the chief investment officer at Unlimited Funds, he tweeted out the U.S. federal expenditures chart and showing that the spending is continuing, guys. It's on track and is expected to continue to go up. And even though Elon and the folks at Doge are trying to cut some of these things, it once again is a drop in the bucket. So Bob says still no signs of a slowdown in total expenditures, despite some shifts in underlying composition away from U.S. aid toward FEMA, etc. So this is the status quo. And you may say, Tony, this is a crypto podcast and show. Why are you talking about macro factors? Because all of these assets are correlated to the macro. And when I learned this, it's when I started to understand the markets better and not moving by my emotions, right? We're all programmed to go with mainstream media and sensationalize headlines and all these things. But once you understand what's happening behind the scenes, what is the root of all these things that drives markets? It's this right here. They keep printing, and that, of course, raises the asset prices, right? Because the denomination is the fiat currencies. So the triggers or the catalyst for keep printing is the government's have to service their debt. And this is goes for every central bank around the globe. And we saw China has already started stimulus, guys. And that's why global liquidity has been surging in addition to other central banks. But of course, we primarily look at the superpowers because they have bigger economies. They spend a lot more. So China, the United States, Russia, and so forth. So Europe as well. So guys, I just see the same story over and over. Now, some people may say, why isn't it pumping right away based on the data? There's a bit of a lag as that liquidity makes its way through the economy and markets. So this is just the data, folks, right? So I want to make sure that you understand. You can literally go to the Fed, the St. Louis Fed website and look at the M2 money supply and the M1 money supply. And guys, for those of you listening on the podcast, it is on the rise. It continues to trend higher and higher and higher since like the beginning of 2024. For the most part, it's been on the rise. And guys, asset prices will follow it. And once again, it's not just the United States, it's the central banks globally. So you can go look at this data. I always point you guys to the facts, the data, the charts, and much more, not our emotions. You're going to see a lot of headlines. You saw people who panic sold over tariff fears. And I often tell people, like, why are you panic selling? That is an opportunity to buy. That is when you buy. Just go follow investors like Warren Buffett and others, right? There's a saying, time in the markets is greater than trying to time the market. So just taking a position and sometimes even just letting it sit for years, obviously you should pay attention, right? And understand what's happening here. But even simply doing that is better than panic selling and moving by your emotions. That's the wrong way. So you have to unlearn the lottery mindset. Well, I play the numbers and next week I get the numbers. No, or I go to the casino and I gamble, I play the slot and I get the outcome right away. That's not investing. That's gambling. Investing requires a lot of patience, requires you learning what the hell is happening in the economy and the markets. You don't have to be a Wall Street expert, but you have to have a baseline knowledge at least, right, to navigate the waters. And that's what I'm trying to share here with you guys. And I've been on that journey. So that's why I'm trying to share it with you. It really unlocked a lot of things for me to even bypass political narratives, right? With the political show you often see with the government shutdown, Democrats and Republicans fight each other. It's all a show. What matters is the bill that they put out and that they both know they have to spend, and the money printer, the Fed and the Treasury are all going to work together to get this done. And guys, not to get too political, but that bill they passed was a Democrat bill from last year, and the Republicans were against it, and they did add some tweaks to it, don't get me wrong, but it's a Democrat bill from last year. So you see, there's a political show, theater that happens, and everybody gets caught up in their own political narratives and they fight each other, but they're distracted from the fundamental issue here. And that is the money printer has to keep going. They have to keep funding the government. They got to keep raising the debt ceiling. So I hope you understand what's happening here. And I'm not trying to say it's not important to vote or it's not important to understand what different parties are doing. But there's certain things they agree on, and they kind of put on a show that they're fighting each other. They're not. They both do the same thing. Go back in history and just watch it play out over and over, right? When you don't get blinded by the narratives and you just see what bill was passed, what the Fed is doing, what the Treasury is doing, it tells you the story. But you have to go past the mainstream media and do your research, right? Not too many people are going to the St. Louis Fed website to look at the M2 money supply. Many are just living their lives going about, oh, you see these Democrats, oh, these Republicans suck, right? They get caught up too much in the narratives instead of looking at the data. And I hope you see where I'm trying to point you here, because this is what drives asset prices. Obviously, like I said, there's another layer to it with earnings for companies and adoption and all these things, right? So don't get me wrong, but the main catalyst is this, guys. So I'm bullish. I like what I'm seeing from the macro, despite the corrections we're seeing here. And, I shared with you guys the other day, the stock market, the NASDAQ, the Dow Jones, the S&P 500 are seeing a little bit of a bounce, but I'm not sure if we're completely out of the woods yet. And maybe this week with the FOMC meeting, we get some positive news and the markets start ripping. And guess what? People are going to forget about this corrective phase. It's the same thing over and over and over. And as I've said in the past episodes and in my recent newsletter, the different signals that have triggered the top of the crypto market are not there. So I look at all these pieces of information together, not just one, to form my thesis. So fingers crossed, guys, we get some good news this week. But I like to remind you guys, anytime there's a FOMC meeting in a respective week, it's extremely volatile. So you're going to see swings up and down. So don't be surprised by that. And you can't really judge the market this week, honestly, right? How many times have I told you guys that you can't judge it? You have to wait maybe the following week, let the dust settle. And hopefully we get some very good news here, given that the stock market, crypto, everything has been selling off. Consumer confidence, all these things are down. So we'll have to wait and see, guys. And here's a funny one that may be good for us. Jim Cramer, the mad money man himself, says the market is preparing to give up some gains. So he's bearish. And as you all know, inverse Cramer, right? You do the opposite of Cramer. So maybe we'll be back this week. If not this week, the following week, where the markets will start to climb out of this hole that we're in. So let's see, guys. But Cramer strikes again. Folks, quick word from our sponsor, and that is Proppy. Proppy is a leader in putting real estate on chain, guys. You can use Proppy to buy and sell real estate, and of course, you can do it with crypto. And their platform is powered by blockchain, and a lot of the processes and contracts and so forth are on the blockchain. This is the future, and this is why I invested in Proppy, or the Proppy token, back in 2018, because I saw them being a leader in this space. I didn't see anyone else doing this. And they're partnered with a lot of the real estate associations in the US and putting titles and deeds on the blockchain, guys. It's pretty amazing. So they've been around for a long time, since 2017. They have facilitated over $4 billion in transactions, and they are a licensed Web3 pioneer. They use Coinbase for their crypto escrow for when you're buying and selling properties. And like I said, they're putting deeds and titles and much more on the blockchain. They've done NFT addresses and so forth. So, we've often talked about tokenization as the future of finance, and everything will be on the blockchain. Proppy is a leader here. And once again, I'm a token holder, and they have a great campaign going on where you can earn some free tokens, such as sharing their vision video. You can get 10 pro tokens. You can sign up and invite a friend and get more tokens, and much more. So this is a great campaign, and why not, right? Get some free tokens. So check it out. Link will be in the description, guys. All right, guys. Now, we've been talking a lot about the big news that happened last week, where Senator Hagerty's stablecoin bill, the Genius Act, made it out of the Senate Banking GOP, or committee, I should say. And it's now going to make its way to the Senate floor to be voted on. And I said in last week's podcast, there are many layers to this onion to peel back here. And that is, one, stablecoin legislation, right? Giving clarity to the market, more people being able to launch stablecoins, and make sure you regulate the players so they don't scam anybody or do anything bad, because bad actors appear in every market, of course. Two, the geopolitical aspect, where US dollar stablecoins will help the US dollar maintain its world reserve currency status. And I said that both Democrats and Republicans are going to be on board here, because these are the things they usually agree on, right? The power of the United States, the money printing, as mentioned earlier. So those are things you usually don't see fights about. So Democrats supported the Genius Act from Senator Hagerty to get this done. And Senator Tim Scott, he posted a video today. He's the chairman of the banking GOP, where he talked about stablecoins and crypto. Let me play the clip for you.
Cryptocurrency is here to stay. We want to innovate in America before we overregulate it. We had a framework put in place, led by Senator Hagerty, Senator Lummis, myself, making sure that the stablecoins, to understand stablecoins, it's kind of like a traveler's check on the blockchain. It gives people more access to the resources, and it will reduce the cost of doing business in America. A leap in the right direction. We will be the country that leads in the cryptocurrency footprint for generations to come. It's another promise made by President Trump on the campaign trail, another promise that we're keeping in our legislative agenda and priorities. The American people can rest assured that democratization is here to stay, and it will get better and better as we move these bills to the president's desk to be signed into law. It was a really good week.
So you heard what he had to say. He started out by saying crypto is here to stay. This is a congressman who heads up the banking committee, guys, the Senate Banking Committee. please recognize what's happening here. This is a paradigm shift, and we have TradFi, Wall Street's here, BlackRock, all these guys, and you have the government on board. So if you are feeling bearish and dismayed by the price action, you're not looking at the bigger picture. You're just emotional about the price. And I don't say that to put you down or make you feel bad, but to wake up, to move beyond the price. Price is important, guys. I've said many times, I have financial goals. I want certain price points for the crypto I hold, and I want to take profits, and I'm going to do that this year. But I got to be patient, right? And I have to look at the bigger picture of what's happening, because there is a lead up to the higher prices. Things like legislation, things like getting all these people on board, which fosters innovation and gives the green light for more capital to come in. When you have the president's pro-crypto, Congress is pro-crypto, the SEC dropping crypto cases, and much more. So I hope you understand what's happening here. So guys, big statements from Senator Tim Scott here. And I'm so bullish on what crypto is going to look like as we progress into the year. Now, U.S. Representative Byron Donalds, he's, of course, out of Florida, and I had him on the podcast years ago. I think it was 2020, if I'm not mistaken. He has introduced a bill to cement President Trump's strategic Bitcoin reserve into law, protecting it from future administrations. So they have to get this done right. It can't be an executive order. It has to go through Congress, because if it's just an executive order, another administration can come in and wipe it out. But if Congress gets it done, guys, this would be really big. And I'm excited. So this is the right move. And Byron Donalds has been pro-crypto for a long time, before many members of Congress. So really great to see that this is happening. Final news item here. I want to let you guys know about Solana. Solana marks 5-year anniversary as network activity dips. Firedancer launch inches closer. So Solana has seen a dip, but the overall market has seen a dip. However, a lot of meme coins have been on Solana, and that market has dried up. Thank God, right? Some of you may hate me for saying that, but it was too frothy, and we saw it was getting too degen, where, I mean, the meme coins and the rug pulls is just ridiculous. And I'm not against all meme coins. Like, I believe there are legit meme coins that have built a brand and a community, and they're trying to get real world adoption and much more. They're not set up as rug pulls, right? Like your Dogecoins, your Pepes, your Bonks, and so forth. But as you guys know, there's been a ton of rug pulls just started overnight, and they get, you think about Dave Portnoy and all the nonsense he was doing and much more. So user activity has dipped somewhat on the network as pump.fun activity wanes. Saturday marked the lowest proportion of tokens graduating to Radium since the platform's launch last year. Great news. Jump Crypto's Firedancer Solana client, currently in its test phase, is expected to launch this year. Now, Firedancer is going to be very big for Solana. Obviously, we have to wait and see how it will perform and how things will play out. But this is a big update coming for Solana, and it should help it to have less downtime and to be more efficient and much more. So let me give you some details on Firedancer. The next significant milestone for the blockchain will likely be the launch of Jump Crypto's Firedancer Solana client, which provides an alternative high-performance client for the network, increasing its transaction processing capabilities and resilience to threats and outages. A testnet version of the client and prototype mainnet version named Frankendancer both launched in September of last year. Though its launch was originally planned for the second quarter of 2024, Firedancer is widely expected to launch in full this year. Helios co-founder Mert Memtaz, a significant figure in the Solana community, predicted in December that Firedancer will go live end of Q2. The upgrade is expected to help Solana scale towards its goal of 1 million transactions per second. That's pretty good. And it looks promising. Now we have to see if it actually works, right? And I'm not being biased in any way. I hold some Solana tokens, but if this upgrade was happening on Ethereum or XRP, I have to say, hey, let's see if it works, right? We're not here to be emotional or biased or have some sort of maximalism like Bitcoin maxis and so forth, but to make sure these things work, because we are here to make money, guys, and ride the wave of this new technology and the adoption it's getting. But Solana has been getting a lot of adoption, and you can't argue with that. That's the facts. But, one of the things that I'm curious about, because it says the end of Q2, and the timing, right? You always got to watch the timing and how it aligns with market seasonality and what we've seen historically. So for example, usually Q2 is very good for markets, especially in bull market years where, April, May, June are very good, but then there's this saying sell in May, go away because the summer times are not usually that great. So could we see a reversal in the crypto market soon that starts the process of us going up? April is really good, and then May is really good. Then there's a sell off in early June, and as always, buy the rumor, sell the news event, right? So Solana may start to get some bullish momentum as people get excited about, oh, Firedancer is going to be launching end of May or June, right? And just like we saw with the ETF launch, just like we saw with Trump winning the election and coming into office, pump, buy the rumor, sell the news, right? Then the dump. This is just the cycle of markets. It happens in the stock market as well. So I hope you guys understand. So this is, the timing of it. This is where you want to read between the lines, right? They may be holding off on this to catch the bullish momentum. So this is promising, but let's see. We don't have a crystal ball. We don't know everything that's going to happen in the future, but we can form a thesis and look at what's happening. So this is really big for Solana, and could signal also that we are going to have that rally that we've been waiting for. And I think that rally would have started sooner if we didn't have these macro factors of the tariff stuff, which has really put a lot of fear in the markets. And don't get me wrong, we were due for a correction after the Q4 run up, which was really strong, right? Because you had the Trump effect on top of it. So euphoria, sentiment was really high, and the markets always do the opposite of the herd. So the herd was coming in, meme coins, Trump won, look what's going to happen, this, that, right? So much euphoria. We're going to $125,000 for Bitcoin and more. Correction. But then you add the layer of the tariff wars, which really kept pushing us down, and that pressure is felt across all markets. But as I started the podcast with, guys, FOMC meeting this week, the status quo must continue at some point, and we just have to be patient. Guys, let me know what you think about all these things. Do you agree with me? And are you looking at the same data I'm looking at? Let me know your thoughts in the comment section. Guys, a great way you can support me in the podcast is by subscribing to my free email newsletter. It's 100% free. It's on Substack. Also, check out my book on Amazon. It's available in paperback and digital. And if you want to expand your crypto knowledge, because knowledge is power, check out my new course at mycryptocourse.com. It's a comprehensive course that covers every aspect of crypto. And what sets it apart from other courses out there, it features expert commentary. You will hear from founders, CEOs, institutional investors, and much more. It is jam-packed with value, guys. Video content, text write-up, downloadable materials, and much more. Pay a one-time fee and get lifetime access. You can go at your own pace and share the login with your friends and family. And check it out, guys. Go to mycryptocourse.com. Thank you for watching and listening. I appreciate you all, and I'll talk to you all later.